ethanol industry is awaiting the EPA's decision on potential changes to the renewable fuel standard. In November, the agency proposed lowering its renewable fuel target by about 3 billion gallons. U.S. ethanol stocks are currently tight. In mid-March, the U.S. had the lowest stock since November, with just over 15.2 million barrels of fuel ethanol. Comparatively, the amount on hand is also amongst the lowest it's been over the last 3.5 years. U.S. Energy Information Administration numbers dating back to June 2010 show stocks have only once dipped below 15 million barrels. Tight stocks, a record 2013 corn harvest, and rising gasoline prices are coming together to form a favorable scenario for ethanol producers. UNL professor of ag economics Dennis Conley joined us earlier this week to look at the recent strength in margins measured against returns dating back to 2007.
Jeff, if we go back looking over historically, say from 2007 up through 2011, the margins look pretty good. There's some variability to them. They might be as high as, say, 40 or 50 cents a gallon. They might be down around a nickel a gallon. On average, they were probably about 25 cents a gallon. And this is based on a 100 million gallon ethanol plant, the Iowa State University model that they use as a benchmark or proxy for ethanol plants. Part of the years, like in the wintertime, those margins, those net returns per gallon would go negative because the driving season, the demand for gasoline is low during that time of year, and so they go negative for a few months. But other than that, over that time period up through 2011, they've been pretty good.
And then you see the drought of 2012. How much of an impact did that have?
It was big. The drought of 2012, and I think everybody understands this, raised the price of corn from about $4 a bushel, 4 to 5, up to over $6 a bushel on average. At times it was $8 a bushel. So that input cost for those ethanol plants just soared, if you will. Gasoline didn't go up to offset it, to help them out. So for that whole year of 2012, their margins, both on ethanol and distillers grains, turned out to be negative.
Tell me where we are now. We're seeing some green come back into these charts. Why?
We're seeing it come back into charts. Again, I think everybody understands the fundamentals here. We had a normal production year in 2013. We have available corn now that's available. Price of corn has gone back down to around $4, $4.25 a bushel kind of thing. And gasoline prices are higher now as well. So now the net returns on those ethanol plants is positive, both ethanol and distillers grains. As a matter of fact, they're showing probably their best net returns that they've seen since 2007.
Yeah, this is a strong time for ethanol. Now, overall, the production that we're seeing here, take me back historically, kind of your chart goes to 2008, and take me through what the U.S. has produced based off of what they've been required to produce.
Yes, there were actually two acts, Energy Security Acts. There was the Energy Policy Act of 2005 that mandated 7.5 billion gallons of ethanol by 2012. And as we look at the chart here, we see that would have easily been met. In 2007, they got ambitious and they said, well, let's raise these standards. Fundamentally, they said for ethanol now, let's double it. So they said, let's make it 15 billion gallons by the year 2015.
Now you see that 15 gallon or 15 billion gallon quota there for 2015. That might not be the case because late last year the EPA had hinted that they might ratchet down, and they might ratchet it down quite a bit. 13 billion gallons is what you have on the chart here for ethanol. What does that mean though?
What that means is that the Environmental Protection Agency has apparently statutory responsibility to set that standard and that mandate. And they have taken petitions. It's been proposed that rather than go for 14.4 billion in 2014, that they drop that back down to slightly over 13 billion gallons. The reason that they give is because we are consuming less total fuel now than what they expected, say, back in 2007 when they set these mandates. We consume about 133, 134 billion gallons total. You take 10% of that, which is what the ethanol blend is, you get about 13 billion, maybe 13 billion plus. And to get any more of that into the fuel supply is very difficult. We just don't have that much E15, E85, E100 going out there to consumers and consumers buying it.
But obviously, if it's 13, if they decide that that's what the number is going to be, that doesn't necessarily mean that that's what the U.S. will produce or has to produce. And you think that based off of what we've seen so far in 2014, it might be beyond that already?
It might be beyond that already. Just because the government mandates, say, 13, 14.4, or 15 billion gallons, as we've seen historically, the industry has actually produced more than the mandate. And they do that when the marketplace is favorable to them and it's profitable to do that. And we're seeing that already started in 2013, carried into 2014. And if we take the weekly production of ethanol in the U.S. for the year 2014, January, February, and most of March, and make an estimate, we project this out, we annualize this, we're seeing numbers that are like 13.7 billion gallons as compared to, say, the mandate that they're proposing of 13 billion gallons. So, you know, they may not get to the 14.4, who knows, for the rest of the year, but they would certainly be above the 13 billion gallons.